Okay, 12th of February, Rudy here. Welcome to the Daily Investment Show, where we go through the ASX and US indices and subsectors and commodity prices, looking for places to invest your money. So we start off with the XKO, ASX 300. So big day from the banks and the miners. So we're hitting the top of the dome here. At the top of our range here, the bank's gonna push us through. So we got the financial index. So again, it's at the top of its range here. Punch through the dome, which is a bullish sign. So that's positive for the banks. ANZ reported today revenues were flat. Actually, you probably should have a look, maybe. So their revenues were flat, but they cut costs. So that's a lovely weekly bar there on ANZ. So staff cuts, AI. See that coming, can't you? Materials sector. So it just continues its journey up. No issues with that. If we compare the materials to our share market, so we've still got the materials outperforming the general share market, and still expect that trend. That's the outperformance there, the big flagpole extended up there. Our energy sector, so we're just coiling. I think the break will be to the up. There's some lovely ETFs here in the ASX and especially in the US in this space. If you want to know which ones, just join. $10 a month. Join the channel. Get all the goss. Gold sector index. So this is our gold miners. So they're having a solid day. Our tech sector still getting walloped. If we compare the materials over the tech sector, so you didn't want to have a bar of money in tech and everything in materials, and that's probably going to continue that trend. The XDJ, so this is our consumer discretionary. Just hanging on to support there, doesn't look great. I don't think that's going to be taking out the Iron Dome there. The staples, Coles and Woolies. So there's a switch on at the moment for between one of them. One of them's a sell, one of them's a buy. Which one's a buy? If we look at the staples, consumer staples over the discretionary, so we can see consumer staples are outperforming the discretionary. So that all sort of going to tie in with job cuts, isn't it? People losing their jobs, they can't afford to go to JB and load up. Our health care index, so still getting walloped. So it's led by CSL. CSL might be picking the bottom. Let's join if you want to know. So the S&P 500 still sitting in that range there. The Nasdaq, same, sitting in the range. So we've got the materials over the S&P 500. So materials that's where you want to be, and do want to be. The XLK over in America, the tech sector, so still being capped. The positive thing is the semiconductor sector of the tech looks strong. If we look at that ratio of the semiconductors over the tech, so whatever that's going up, it's in general positive for that American tech sector. The energy sector over in America is breaking out. The energy over the tech sector. So energy's outperforming tech, and that's a nice declining channel there, which when broken is very bullish. The financial sector over in America. So it's, well, boring really. The energy sector over the financials. Look at that, nice declining wedge, break, come back, retest, go. So if you're in America, you certainly don't want to be. You want to be out of the banks and into energy stocks. Super fund. So your super fund was up 0.2%. We've got our my little pet project for people in Oz Super, Host Plus. You can build your own. It's a materials focused portfolio. So we're up 60% for the 12 months. Your VGS, so you're flat, looking boring. If you had a materials over VGS, so if you had a materials focus, you'd be outperforming. Just a quick, we've got the RRTP portfolio, which is just 5 ASX only ETFs, materials based, of course. We're up 78%. I'm clocking over 1 year on the channel now. And we got the RERP, which is again materials based, 4 in Australia, 6 in the US, and we've doubled our money. So materials is where you want to be. The US dollar looks like it's trying to find a bottom. It probably will, because everyone's bearish and say it's going to crash, so it'll probably bounce. Our 1 year rates don't look like they're going to drop. Japanese 10 year, so they're stalling at the highs there, but yeah, I've shown you that. I think I've shown it to you. The relationship with gold. So there's a clear relationship between the Japanese interest rates and gold. So it's a sort of a sign of bit of financial instability out there and people flocking to gold. Aussie dollar. So we poked our head up above resistance. I guess we haven't really totally. So I think that's a good run, and probably we'll have a bit of a pullback with the strengthening Aussie dollar, US dollar. Gold. Okay, so gold's just. So probably a strengthening US dollar might have a bit of a pullback. That's fine. I don't want it to just consolidate. And I'll show you why a bit later. So Aussie dollar gold, so you might get a bit of a lift. Bitcoin, trying to find a bottom. Yeah, this one here. So this is this is our gold miners over the gold price, Aussie dollar gold price. So you can see people have been not sure what value they can place on the miners on the gold price. So if the gold price can just stabilise, this gold miner will start outperforming the gold price, which is what I'm looking for. Silver, so similar to gold, just cruise, just hang. I'm pretty sure that's the bottom. Chinese silver price in US dollars at 92. So there's still an $8 premium being paid over there in China. We got copper just chilling there. Oil getting ready to go. Who said oil's over? I reckon we're about to You got to get yourself loaded in this space, energy. The oil to S&P 500 ratio. So we're going to get oil outperforming the share market. You're full of shit, Rudy. Natural gas. So pretty volatile, as you can see there. But back at support. Iron ore. So iron ore back at support. Good time to get some iron ore miners. Join the channel, $10 a month if you want to know. Lithium. I think lithium's due for a bit of a pullback. Uranium. Another one bullish on. If you don't have any uranium, you need to get some, because that's going to go. Thermal coal, it's ranging. Coking coal, so that's due for a bit of a consolidation. Nickel, so it's had its pullback. Next move up. Aluminium. So aluminium's moving on its way up. Bauxite. So commodities still in. They've all had this. This will be the theme. The big run up, consolidation. So this is like gold and silver. Done the run up, the consolidation, then up for the next leg. All right. If you want specific shares, ETFs, ASX US, join the channel. $10 a month. Otherwise, tomorrow.